But joining us this morning is Manish Sonthalia, VP and Fund Manager at Motilal Oswal AMC. Manish, morning and thanks for joining us today. It's been total mayhem that I was talking to a couple of guests earlier as well. What's your outlook as far as markets are concerned right now, and how are you viewing it?
Look, it all boils down to what sort of an earnings growth we are going to see. I mean, post the first quarter numbers, it looks like that we are not going to see any growth in earnings for this fiscal year as far as corporate earnings are concerned. So as far as the Sensex earnings, we were working with 1300, maybe it will end with something like anywhere between 1200 and 1240, 50, as against 1180 for the last fiscal. So, you know, on a valuation wise basis, if you are viewing the 10-year GSEC at 9%, then the prices to earning multiple should not be more than 11-12 times. I mean, that's the worst case scenario. So, you know, on a Sensex wide basis or a Nifty wide basis, you're looking at anywhere between 4,800 to 5,000. That should be the valuation case for the markets, the worst case. I mean, if things improve, and that will depend a lot on how the rupee stabilizes, because the interest rate rise in, you know, due to the 10-year GSEC moving up, as well as the raw material costs will hurt the bottom line of corporates big time. And that is the main reason what you know, the markets are factoring in, that there is not going to be any earnings growth, or maybe 1-2% sort of an earnings growth, as against the 9-10% sort of an earnings growth that you started with at the beginning of this fiscal.
Fair enough, Manish. Just hold that thought that it's time to address the market opening and the way it's actually panning out right now. You'll be just getting the opening quotes as far as the index is concerned in just any second right now. Remember, the SGX Nifty and the pre-open all indicating to a 1% cut, 200 points lower. Straight away on the index is 230 points right now. It's the kind of cut that we're actually talking about as far as the currency is concerned. Run you through a couple of losers. Straight away, BHL's down around about 1.7%. Is the kind of cut that we've seen on that particular counter, 2% now. Take a look at the banking space. ICICI Bank, second day running, it's got an over 2.5-3% fall in terms of trade today. HDFC Bank 2.3% lower. SBI 2.6% lower. L&T down 2.5%. Hindalco is extremely weak. The metal stock were a little resilient yesterday, but they've all come crashing down today as well. Hindalco 3.2, Sterlite 3.5, Tata Steel down 2.2%. You got more losers in terms of the oil and gas pack. Reliance Industries and ONGC losing out anywhere between 2 to 1.5%. Some other defensive names, let's get a mention on that. HUL 1% lower. ITC is now down nearly 2%. Is the kind of cut that we've seen on that stock there. Some of the other defensives like the pharma space, Sun Pharma down 3% almost. Cipla and Dr. Reddy's are also negative. Cipla down 1.5%. Dr. Reddy's down by 1%. Auto majors, Hero Moto and Bajaj Auto also on the losing side. Hero Moto down 2.6%. Bajaj Auto is losing out quite sharply, 2.2% lower. Maruti is also on the negative by almost 2%. Tata Motors 2.5% lower is what we've seen. Just a couple of stocks that are actually holding on have been the IT space. And as we were talking with Nitin earlier in this in the day, Infosys 0.2%, Wipro 1% higher, and that in fact was one of the top picks at Espirito Santo itself that they were talking about earlier. But the index now 312 points being shaved off, and more importantly, you're below 18,000 is what we're talking about on the Sensex as far as trade is concerned. So you slip below those levels in terms of trade today. It's been another day when you got tremendous weakness coming in. Let's see what's happening on the Nifty as well, and a quick mention there as well as to what kind of cues we're tracking. 96 odd points lower. 53.19 is the level that we're tracking on the index right now. 48 stocks gaining, just 2 odd stocks gaining is what we're actually seeing right now. Let's pull up individual movers, and I mentioned there, Ranbaxy up 1.4, Infosys 0.2% higher, and Tata Power up by just 0.07%. But take a look at this side of the index. IndusInd, PNB, BOB, the banking counters being hammered out of shape. Axis Bank 3.4% lower, DLF 3.2%. Rate sensitive is also being taken it on the chin today. Pull up some more names and factor in terms of the losers right now and the kind of pressure that we're seeing. Bharti 3.2, you have Hindalco down 2.9, Sun Pharma also down 2.7% is the kind of crack that we've seen as far as markets are concerned. 53.19, the question is going to be if we can hold on to 5300 or not in trade. But Manish, let me come to you with the banking pack. That's really been the talking point over the last couple of weeks. What's really happening here and your thoughts on it?
I mean, the recent developments on the spike in 10-year GSEC yields is going to bring heavy mark-to-market losses on the bond portfolio of banks. coupled with that, you have a problem of accelerating asset quality deterioration, and added to that will be lower credit growth. So all of that is playing on the banking stocks, and I mean the next quarter and the quarter after that numbers are going to be quite terrible as far as the banking sector is concerned. So it's in a vicious circle. It all depends on how the rupee, the interest rates move, and should we see a halt in the decline of the rupee, hopefully we should see a decline in the accelerating 10-year yields, and that should halt the slide in banks. But each one is feeding on the other. As we see further rupee depreciation, we see further hike in interest rates. That is bearing on the banks' stocks.
Manish, the other question that we've been discussing with market experts over the last couple of days has been on the fact that what kind of valuations can one actually justify when we talk about the markets in this kind of a scenario, or it's not right to look at valuations. Which camp do you actually belong to? Are valuations attractive right now, or you don't want to track that right now, looking at the way the currency and the macro factors are actually playing its part on the equity side?
It all boils down to what sort of an corporate earnings growth is going to be there for fiscal 2014. People don't want to look at fiscal 2015 because that's a far way off. We want to concentrate on fiscal 2014. So what began with a single digit earnings growth is today now hovering at around zero growth or 1-2% sort of a growth. And for a zero growth scenario, you should be trading at bond prices to earning multiples, which should be 11-12 times. And that's the worst case scenario. Does second half bode well for earnings growth? Only time will tell, and that will depend a lot on how the rupee behaves, because that will have a bearing on how the raw material costs shape up, and how for the banks as a whole, which is 25-30% of the market, what sort of a profit degrowth you're looking at. So I think individual stocks and individual sectors will have their own dynamics, but on an aggregate market-wide as a whole, I see 11-12p as the worst case scenario for the markets. On the Nifty, it should be somewhere between 4,800 and 5,000.
Manish, what are some of the pockets that probably look attractive right now? Is it the IT and the healthcare space that one should be looking at? What's the view from your side?
I mean, it's no point to be a contrarian at this given point in time. You try to keep the portfolio as defensive as possible, and the only hiding places are your IT, healthcare, your consumer, FMCG to some extent, and telecom. Other than that, it's like throwing darts in the dark. So we are positioned, as far as our portfolios are concerned, on some of the marquee names within these spaces, and we shall stay that way till some more clarity emerges on the macro front.
I'm going to discuss a couple of those sectors in detail in just a couple of minutes there, but I want to get your thoughts on the mid-cap crash as well, because though we've been talking about concerns on a year-to-date basis of a 9 to 11% cut on the Nifty itself, it's the mid-caps that have really taken it on the chin when we talk from this year-to-date performance. That's the mid-cap index, 26 to 27% lower. If you pull up the Nifty, it's down about 10 to 11%, but nothing compared to the kind of fall that we've seen on the mid-cap markets there. What's really transpired there, and does it make sense to look at any mid-caps right now? Is there any value in some of these mid-cap companies?
Well, there are pockets of value in, whether it be the large caps or the mid-caps, and if Sensex has fallen 13% and, mid-caps have fallen more than that, it has always been that way, that, the volatility in the mid-cap space seems to be higher than that of the large cap space. But as I said, it's wise to be staying put in each of these four sectors, whether it be the large cap space or the mid cap space, because the earnings resilience is to be seen only in these 3 or 4 sectors. Even if we talk about the last quarter numbers, we have decent sort of 15% sort of a growth, even in FMCG names, and IT has posted something like 14-15%, and it will only get better because rupee was at 56 at the end of first quarter. Today we are talking about closer to 64. So earnings acceleration will be seen in the IT pharma names, and whether it be the large caps, mid caps, these are the places to be in.
I want to talk about the auto space, Manish. As far as that segment is concerned, been getting a lot of news regarding Tata Motors of late. M&M was in the spotlight on the back of its earnings and how the tractor growth actually panned out there. Is this a pocket to actually watch out for, or you would avoid it right now?
I mean, in the auto space, it's, we would be positioned on the rural India story, and within that the two-wheeler space, and within that the entry-level segment. would continue to be better placed as opposed to higher CC segment in the two-wheeler space. So second half is going to be good for the two-wheeler space as a whole. Passenger cars are in a limbo. We don't expect too much of a growth in the passenger car segment, and HCV is in a severe downturn. It's not going to improve in a hurry. So I think Mahindra looks good at these prices. It's a pure tractor play. Large segment is a pure tractor play. And that would continue to do well. Even last quarter numbers, you're saying that was the saving for the company in terms of your volume growth, and that is what we're going to see going forward as well, thanks to a very good monsoon. And within the two-wheeler space, I think Hero Honda has its best place in the entry-level segment.
True. Manish, as we speak, rupee is at 64.02. Remember, these are record lows that we're talking about, and in a matter of days, you've come down to these levels. 64.03, 1.5% almost is the kind of weakness that we've seen. Take a look at the hit it's having on the equity side as well. You're down almost 1.9 to 2% on the equity space. It's turning out to be another day when you've got tremendous weakness coming in. 53.12. Wonder if we can actually hold on to 53 or not, because on the currency at least, it's turned out to be extremely weak today. 64 taken out in within half an hour of the currency opening itself is what we've actually seen. Let's see if this actually stabilizes as we progress from here or not. But at least in terms of cues right now, it's extremely weak. 64.01 is the kind of weakness that we've actually seen in terms of the currency so far. Manish, your thoughts as far as the rupee is concerned right now? Well, I mean, any outlook that one can actually look at, or range that you're working with, just purely in terms of estimates?
I mean, the consensus seems to be a 65 on the rupee sometime in the medium term. But I think what needs to be addressed is the short-term outflows that India is going to see over the next 8-9 months. I think that is what is spooking the markets much more. You talk about figures of $170 billion or more. Everybody is focused on the current account deficit. I think the measures taken by the government will play out sometime into the future. But what about the rollover of the short-term obligations that India has to do till March 2014? I think if you try to address that point, maybe that would be a savings grace for the rupee, the free fall of the rupee that we are seeing.
All right, Manish, we leave it there. Thanks so much for taking the time out and talking to us today. That's a perspective coming in from Motilal Oswal, AMC out there. Almost 1.92% lower, but it's a currency 64.03. K and Days joining us on the phone line right now.